The end of the longest government shutdown in United States history has now been confirmed, and we're going to analyze how its reopening could impact the crypto market. Why is Michael Selig's nomination to head the CFTC so critical? And on the other hand, could the IRS soon allow crypto ETFs to participate in staking activities? Would that benefit the cryptocurrency market? Let's take a closer look. After more than 6 weeks of paralysis, the US government is finally back in operation. It's been 43 days of shutdown, the longest ever recorded. The reopening happened when Donald Trump signed the funding bill just hours after the House of Representatives approved it, a resolution that for many was already starting to feel like an annual tradition. The point that created the most tension during negotiations was the future of healthcare funding. Democrats pushed to increase resources for the sector, while Republicans preferred to postpone that discussion. After signing the bill, Trump said he was willing to work with the opposition toward a broader healthcare agreement. This is a crucial issue because it determines how much is allocated to programs like Medicare and Medicaid, which provide coverage to millions of Americans. But this truce is only temporary. The approved bill funds the government only until January 30th, meaning that in just a few weeks, lawmakers will be back at the negotiation table to finalize the 2026 budget. And this reopening doesn't just unblock administrative activity, it also has direct effects on the financial world, especially on cryptocurrencies. With federal employees returning to regulatory agencies like the SEC and the CFTC, long-awaited decisions are finally back in motion. The SEC, for example, has several pending applications to launch spot-based cryptocurrency exchange-traded funds. Meanwhile, the CFTC resumes its hearing to confirm Trump's nominee, who could lead the agency, a key position for overseeing derivatives and digital asset futures. On top of that, the Treasury is once again reviewing public comments on new stablecoin regulations. Even so, the crypto market's reaction has been surprisingly muted. Bitcoin barely moved after the reopening, a contrast to past occasions in which this type of news triggered much clearer price increases. This time, investors seem to be keeping a cautious stance. In that exact context, an extra piece of the regulatory puzzle appears. Michael Selig, one of the main crypto advisors inside the SEC, is preparing for a key Senate hearing that could make him the next chair of the CFTC. His nomination comes after the dismissal of Brian Quinton, an episode marked by political tensions and pressure from influential players in the crypto ecosystem, like the Winklevoss twins, who were seeking guarantees on how compliance rules would be enforced inside the agency. The internal situation at the CFTC doesn't make things any easier. Since September, Caroline Pham has been the only active commissioner in an entity that normally has 5 members, and she has already hinted that she might leave once the Senate confirms a new chair. If that happens, Selig could temporarily become the only leadership figure in an institution that is fundamental for US financial markets. All of this is happening in the middle of a much broader legislative debate. Congress is discussing deep changes to crypto asset regulation. The House of Representatives has already passed the Clarity Act, a bill designed to define what falls under the SEC's supervision and what would be the CFTC's responsibility. The text still has to go through Senate committees, and Republicans on the Agriculture Committee have just introduced an updated draft, reactivating a debate that had been frozen by the government shutdown. If these reforms move forward, the CFTC could take on a more defined role in crypto regulation right when it's going through its most delicate moment in terms of staff and leadership. That adds even more uncertainty to a sector already used to volatility. Meanwhile, in another corner of the regulatory ecosystem, the Internal Revenue Service has taken a significant step by publishing guidance that allows crypto-based exchange-traded funds to participate in staking activities. Staking, which consists of locking up crypto assets to validate transactions and earn rewards, had been a complicated practice for regulated funds because of the lack of tax clarity. The new guidance creates a safe zone so that trusts and ETPs can include staking as long as they meet strict conditions, operating on a recognized national exchange, holding only cash and a single type of crypto asset, and relying on a custodian that minimizes operational risks. This opens the door for crypto ETFs to offer additional yield from staking, something that was practically impossible until now. This decision removes one of the main barriers stopping large institutions from integrating staking into traditional products, and it could further boost the adoption of crypto assets in regulated portfolios. The first thing to note is that this guidance arrived just as the government was getting ready to end the shutdown that had left agencies like the SEC and the IRS operating with minimal resources. Even though the Senate hadn't voted on the measure at the time the guidance was published, several lawmakers had already shown a willingness to support a temporary resolution to get activity going again. With the reopening now underway, everything suggests that regulators and tax authorities will be able to speed up key decisions that directly affect the crypto industry. Let's start by looking at the US indexes to see how they reacted to the reopening of the government. Take a look at the S&P 500. After the reopening, notice how much volatility we had in the American indexes, which exploded to the upside, almost reaching 3%. For equities, that is a huge move. They stopped just short of new all-time highs. So the S&P 500 clearly reacted very positively to the government reopening. We can say the same about the Nasdaq. After its brutal drop, the Nasdaq was also strongly boosted by the reopening, and the Dow Jones as well. In fact, the Dow Jones even managed to reach a new all-time high. That's absolutely crazy. Even the price of gold, after breaking out of its accumulation phase, was able to use the reopening as a catalyst, basically because money was flowing back into financial markets. But here comes the really striking part. What happened with Bitcoin and crypto? Honestly, it's like this whole story has nothing to do with them. Nothing happened here. What shutdown? What government? Bitcoin, Ethereum, and the rest, as you can see on screen, haven't moved up in the slightest. They're just doing their own thing. And if we look at the total market cap, which is the true reflection of what's happening across the entire crypto ecosystem, you can see there's nothing magical going on either. But let's take it step by step and analyze what's happening with Bitcoin. In the crypto ecosystem, in general terms, we're paying a lot of attention to macro defense zones. Ever since that big scare on Black Friday, triggered by Donald Trump's announcement that he was going to rekindle the tariff war with Xi Jinping, we had that flash crash that slammed into key areas. In Bitcoin's case, it hit a major defense zone. In my view, if you ask me, it's pretty blatant, because here the market is giving us information that, in my opinion, is worth its weight in gold. After the drop, prices come back to hit that same structure again, telling us that those investment funds that were buying and building a bullish reaccumulation phase are now trying to defend their position. They do not want to see their accounts go into the red. Meanwhile, what is the retail investor doing? Well, as you can see on the chart, throughout Bitcoin's entire price drop, retail has been buying in a disastrous way. Let me give you some context. Retail investors were buying here. They were buying here too, at this price level as well. They were buying here and here again. Basically, they've been buying anything that moves. While price is falling, retail keeps buying, getting stopped out, and then trying to buy again. That's exactly what we're seeing. Remember, this indicator is showing us what small wallets are doing on-chain, so this is really valuable data. What do I want to see before I start thinking Bitcoin is ready for a real bullish move? I want to see retail starting to sell, because as you know, retail is almost always wrong. And if they've been buying all the way down, what I want to see is the moment when they start selling at the wrong time, so we can think that crypto, and in this case Bitcoin, has a clear path to keep moving higher. And if you ask me, I think we're getting close to that point for the midterm. I do have doubts that this will happen in the very short term. What do I mean? My feeling is we're not going to see that today, or tomorrow, or the day after. What should really catch your attention in this current Bitcoin phase is that institutions are showing a slight preference for buying. That doesn't mean price can't fall first before it eventually goes up. We'll get into that later. But yes, we're starting to see that mild bias, although it's not clearly defined yet. And from a price structure point of view, Bitcoin is not telling us, hey, I'm ready. Let's explode to the upside right now. I don't see that clearly. What I do see is that they might be working on an advanced trend line, a very interesting micro accumulation process, if we want to believe that after breaking this advanced micro trend line, the macro move could continue. But right now, we still don't have any real breakout. Like I said, I don't think everything is about to happen right now. In fact, there's still room for a further drop. Why not? Or for a long consolidation. It doesn't really matter. What I do see is that retail has been buying the entire drop in a terrible way. way. I see that retail buying is starting to weaken. We just have to wait for retail to start selling so we can start buying. Now look at Ethereum's price. In Ethereum's case, we've already seen a trap below the defense zone, and here we need to zoom in because what the chart is showing is key. If you want to know whether there's going to be momentum in the very short term to keep moving higher, what should you look at? Where should you pay attention? I'll tell you right now, Ethereum. Why? Because we're coming from a macro structural trap. I don't know if it will be able to hold all the way, but it is a trap. What did price do after breaking below that macro defense zone? What price has done is work through an accumulation process that gave it enough strength to break to the upside, then come back to confirm that structure once, twice, and now it's coming for a third time. If on this third test it makes a little fake out down there, honestly, that wouldn't be bad at all. But if you see that after that little trap, price starts to recover, then yes, I'd start thinking about meaningful bullish breakouts in crypto. Even so, like I said, that's not my base scenario. But since neither I nor anyone else is a fortune teller, I have to consider those setups I'm not really expecting, so I can react in time if I start to see them play out. Now, look at what retail has been doing with Ethereum. During the asset's entire persistent drop, retail, the poor devil, has been buying all the way down. And of course, that can't last forever. At some point, after losing again and again throughout Ethereum's whole decline, that behavior is going to reverse. Meanwhile, look at what institutions were doing at the same time. They were clearly selling Ethereum. Winners win and losers lose. That's why, as I'm telling you, even though we can see institutions now buying this whole range, just like in Bitcoin, and if we zoom in, yes, there is a certain institutional bias toward pushing prices up. On a macro level, we still don't have a clear confirmation that we're ready to go higher, but I do think something is cooking. And one asset that I find really interesting to track is TRX, Tron, because it's been moving up with a lot of strength. Remember, you're looking at the 4-hour chart. After that rally, they've set an anchor area in an extremely exaggerated way. That's our defense zone. Notice how obsessively they've defined that structure. And after that level was set, what are we seeing? We're seeing the possibility that we might be in a macro trap. If that macro trap gets confirmed, we could say that from a long-term perspective, we're at very attractive buying levels. So, how should we be tracking Tron's chart now? Zooming into the 1-hour chart, we're evaluating that we're in a bullish accumulation process. I focus on these downside attacks where a lot of volume came in, and then look at price. The result, compared to the effort, was totally the opposite. These extremely aggressive downside pushes, with heavy volume that failed to trigger any real bearish catastrophe, really catch my attention. Look at these drops. Look at the volume. And none of them are able to follow through. So what do we really have here? First, we have stopping volume coming in, volume that halts the move, and then a sequence of absorptions where shorts get trapped. That's why I'm seeing rotation here. And I've become a bit obsessed with one price level for Tron, 28 cents. Basically, I think that as long as that level holds, the bullish idea stays alive. We remain bullish. But if we lose that level I just showed you, then the idea of being at a macro market extreme could get more complicated in the short term. That's why it's so important to track this structure and to understand that if financial markets don't seem ready to explode to the upside, and right now, it doesn't look like they are, it probably means they'll need more time, more range, more down a bit, up a bit, and so on. In all that back and forth, keep a close eye on Tron and on that price level I just mentioned, because it's a very interesting frontier to use as a proxy for the entire crypto ecosystem. And here I want you to notice how, very clearly, institutions have been selling all the way down during TRX's decline. Look at how they're selling down here at the lows. Now, why do I say I still don't see the black swan yet? The clear confirmation of a trend change. Because what I want to see in TRX is institutions stopping their selling. What I want to see is institutions starting to buy aggressively to generate a black swan move through that creek, while retail starts to sell. I want them to be wrong, because they've been buying, and maybe they still need to be shaken out. And how do you shake out retail? You take price against them. Maybe toward that price level I showed you on the previous chart. That's where they get shaken, where retail gets exposed even more. And only then are markets ready to make the move and flip the dynamic. At that point, yes, we could have a real confirmation, especially if we keep in mind that we're identifying a potential macro market extreme for the entire crypto ecosystem.
I want want to introduce you to our private Telegram channel, which is completely free. In fact, at the time of recording this video, we're also live streaming for the community. During these live sessions, we look for trading opportunities in the futures market. We focus on intraday trades, and within this community, members also share their operational ideas, what they're working on, and what they're looking for in the markets at any given moment. It's honestly very interesting. This community is constantly learning and improving. So if you're an active trader and tired of trading alone, you can join our community. It's very simple. The requirements are as follows. You need to be a user of BitUnix or BuyDFI, have deposited cryptocurrencies into your BitUnix or BuyDFI accounts with a minimum value of $100.00, and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. I'm leaving you the BitUnix promo details and the Crypto Insight Premium Access form in the description and pinned comment of this video.
As you can see, we're optimistic about the crypto market. That said, my feeling is that we're not quite ready to explode upward just yet. There could still be some twists and turns ahead, but here at Crypto Insight, we have a framework to track when we're getting close to that big moment we've all been waiting for. Now tell me in the comments, what do you think about the crypto market? Are you optimistic or pessimistic? Would you like us to analyze Cardano in upcoming videos? Drop your opinion in the comments. And if you found this advanced technical analysis interesting, hit the like button, subscribe to the channel, and click the bell so YouTube lets you know about future uploads. Good luck with your trading, and see you next time.